Thank you. You can be seated. Thank you so much once again. We go straight into event proper while I recognize the presence of our leaders and others that are here. Let me first recognize the presence of the president of LCCI, Asiwaju Dr. Michael Olawale Cole, CON. Also, in that order, let me recognize the presence of the Deputy President, LCCI, Mr. Gabriel Idausa, FCA. Next to Mr. Gabriel Idausa is our Deputy President, LCCI, Mr. Kunut Uwem, MFR. You're welcome, sir. Also, for this event, we'll be having an online he will join us online, Dr. Ken Akabweze, Ben Akabweze, I think, DG Budget Office of the Federation. I'm sure he'll be joining us online. Also, we have with us Mr. Banjo Adegbongbe, Managing Director, Executive Officer, Coronation Marshall Bank Limited, ably represented by Ms. Chinwe Egrim, Chief Economist. Is she in? Okay, I believe she will join us in the course of the day. Mr. Adekunle Olumide OON, former DG of SCCI. You're welcome, sir. We also have with us online perhaps Mr. Andrew Nevin, PhD, partner West Africa Financial Services leader and Chief Economics with PricewaterhouseCoopers. I believe you'll be joining us online as well. Mr. Taiwo Oyedele, Africa Task Partner, I believe he is in, maybe not yet. Okay, he will join us in the course of the day. We have with us also Prince Abimbola Olashore, FCA, Vice President, SCCI. Prince, you're welcome, sir. You're welcome, sir. With us also, we have Dr. Chinyere Almuna, FCA, DG, SCCI. You are welcome, man. Okay, right away, we will have the first thing done today. We'll have the welcome address by the president of SCCI, Asiwaju Dr. Olawale Cole, CON. You're welcome, sir.
Very distinguished ladies and gentlemen, please allow me to make a few recognitions as part of my protocol. The Director General also is online, Budget Office of the Federation, Dr. Ben Akabweze. I also acknowledge the Chief Economist of Coronation Merchant Bank Limited, our great sponsor of today, MS Chinwe Egwem. I acknowledge Dr. Andrew Nevin, Chief Economist Partner of PwC Nigeria, Dr. Olokere Afolabi, Head of Research, Securities and Exchange Commission, SEC. I hope we also have here Mr. Taiwo Idele, African Tax Partner of Pricewaterhouse, PwC Nigeria. Of course, our very able Deputy President here present, Mr. Gabriel Dahosa FCA and Sakunuf MFR, both Deputy Presidents of the Lagos Chamber of Commerce and Industry. We have the organizer of today's event, my very good friend Aburo, the Vice President, Chairman of the Public Affairs and Advocacy Committee, Prince Bimbo Olashole FCA. Director General, Dr. Chinyere Amona FCA, officers, council members. I can see a number of high quality people here today. I don't spend all of your time for this recognition. I stand on all the names already acknowledged by the Director of Ceremonies. Very distinguished guests, ladies and gentlemen, it gives me great pleasure to welcome you all, our very esteemed guests, to the 2022 Second Mid-Year Economic Review and Outlook Conference organized jointly by the Lagos Chamber of Commerce and Industry in partnership with PwC Nigeria and the Coronation Merchant Bank Limited. I would like to especially acknowledge the invaluable contributions of the Public Affairs and Advocacy Committee of the Lagos Chamber under the able leadership of Prince Bimbo Lcci towards the successful hosting of this conference. Very distinguished participants, the essence of this session is to stimulate robust conversations on Nigeria's economic performance in the first half of this year and share perspectives on what economic agents, including businesses, investors, corporates, and stakeholders should expect in the second half of this current year. As you may be aware, the first half of the year saw significant shocks and disruptions caused by factors such as the war in Ukraine, insecurity, and persistent revenue challenges. In the first quarter of this year, Nigeria's gross domestic product GDP grew by 3.11% year on year in real terms, indicating the sixth consecutive quarter of growth on the back of significant expansion, expansionary monetary policies. The Nigerian economy, we all know, in the first half of the year, witnessed challenges in the oil sector. This very all-important sector has been bedeviled with the issue of oil theft, pipeline vandalism, subsidy corruption, and low investments in the third quarter. Many factors will weigh on growth in such as CBN's rate hike, as well as the rate hikes by other central banks around the world. Rising energy costs with diesel above 800 per liter, Jet A1 at 710 Naira per liter, and PMS selling above the government regulated price of 165 Naira per liter. These are the things we now face. These price levels will continue to aggravate production costs, which may lead to restrained manufacturing and eventual job losses. The worsening security situation in many parts of our country might continue to threaten agricultural production, manufacturing value chains, and logistics. We expect to experience some fiscal constraints because of debt overhang accompanied by a high debt service burden and heavy subsidy costs. There are therefore heightened fears all over of contracting output, constrained production, and recession risk as we navigate the murky waters of the year 2022. The Chamber had earlier in the year projected a growth of 2.5% for our economy. This projection was anchored on the assumption of one, sustained high oil prices, B, transition to a market-reflective exchange rate system. 3, targeted fiscal interventions. And D, gradual implementation of reforms in the oil sector. However, while these factors appear somewhat realistic, factors such as rising security tension, lingering liquidity constraints in the currency market, low vaccination rate all over the country, and the lack of will to follow through with the critical reforms are the major downside risk to the country's near-term outlook. Distinguished participants, while part of our conversations today shall center on an effective or objective review of the Nigerian economy, it is also pertinent to bear the following in mind. 1, what blend of fiscal, monetary, and regulatory policies is needed to stabilize prices and stimulate growth to the desired level? Also, 2, what path should the private sector take in playing its role in fixing Nigeria's numerous challenges? Beyond the high-level engagement, public policy advocacy, and public forums, what more should the private sector do to engage or collaborate with the policy makers for effective resolution of our national challenges? And lastly, what are the investment opportunities in the Nigerian economy, and how should investors and businesses position to leverage emerging opportunities? On a closing note, let me take the opportunity to acknowledge the support from Coronation's Merchant Bank in hosting this conference. We also appreciate the cooperation received from the team of PwC Nigeria towards the sustenance of this legacy program. Once again, it is my pleasure and privilege to welcome you all as speakers and attendees to this session. I believe in the intellectual capacity of our speakers to do justice, in fact, sound justice to this discourse. I urge you all to pay rapt attention and feel free to ask questions during the Q&A session. I thank you all for your kind attention.
Thank you, sir. Thank you for that speech, that welcome address, very motivating, I must say, and direct to the point. Now we'll go to the next thing on the agenda for today. We'll have Dr. Ben Akabueze, I'm sure is online to take his session. Dr. Ben Akabueze is the DG Budget Office of the Federation. Can we have Dr. Ben if he's ready now? Mayowa.
Good morning. Hello. Can you hear me?
Yes, we can.
Good morning, everyone. Mr. President, DG, distinguished participants, may I respectfully request to stand on existing protocols, and also to ask that I simply be referred to as Ben Akabueze, this new wave of Dr. Akabueze. I'll wait till I have a PhD, another honorary degree, before I answer doctor. Thank you very much. Can I please be allowed to share my screen? Okay.
Yes, please go ahead.
All right, you can see my screen, right?
Yes, we can.
This is an outline of what we will be discussing today. Very little time, so I'll just get on with it. Okay. As you know, the budget for the 2022 budget was signed into law in the last year of 2021, and the implementation actually commenced on the 1st of January. I need to clarify this because I've read comments suggesting otherwise. What happened was that agencies of government which had received capital releases under the 2021 budget, but which were still unspent as of 31st December 2021, which ordinarily by financial regulations should be refunded to the Treasury. Okay, between the Executive and the National Assembly, procured necessary authorization for the agencies to retain those funds and continue to implement the projects which they had already contracted for. But the 2022 budget, implementation commenced on 1st of January. Of course, there are two broad parts to the budget, the recurrent and capital. And right from January 1, the recurrent spending under the 2022 budget. This budget is, sought to focus on completion of projects for the administration, and its effective budget include strengthening the macroeconomic and business environment, accelerating economic growth, investing in critical infrastructure, human capital development, and which enable institutions, especially in key job-creating sectors. Incentivizing the private sector investment, strengthening the resilience of the economy, and enhancing the social investment program, which is calculated to extend a helping hand to the most vulnerable Nigerians. How has the economy fared in the first 4 months of the year? The recovery from recession, the COVID-19 induced recession, has been sustained. In the first quarter of this year, we recorded the 5th consecutive quarter of growth. Most sectors recorded positive growth. And so basically, the broad-based, growth. But like many other economies, our economy faces lingering COVID-19 pandemic effects, as well as, the impact of the, Russia-Ukraine war, which has turned out to be a crisis upon a crisis, just as the world was still trying to raise its head from COVID-19, the Russia-Ukraine war, broke. But then, despite the growth, sustenance of, positive growth over the last 5 quarters, the socioeconomic conditions remain still very challenging. Poverty rate is still, high. Okay, 40% of the population are about, into NBS's latest, data. Unemployment is also still, very high, and all of these, basically represent significant socioeconomic challenges and make some critical reforms a lot more difficult, against this sort of backdrop, this sort of background. Still on the performance of the economy, inflation rose up to 17.71 by May. This way higher than we had projected by this time last year when we laid out our plans and estimates and projections for 2022. But the point must be made that it's still lower than where we were at May last year. Inflation is largely driven by food inflation. Food inflation itself has been fueled by fuel price increases, and which affect the cost of distribution of food, thereby worsening the structural issues as well as the problem of insecurity that have been previously responsible for high food inflation. Of course, the fact that two critical food-related components, wheat as well as fertilizer imports, significantly came from the Russia-Ukraine axis. These have also, compounded the situation. And so that's the situation we have with inflation, which I dare say is a global thing, with countries like US seeing their highest inflation in 40 years. So what we have is, against the backdrop of a fragile domestic situation, we've got these global, it's basically pounding, harder on us and really making things extremely, difficult. So how has, the budget performed thus far? In terms of oil production, you'll recall that the original 2022 budget was premised on 1.86 million barrels per day. We had to amend that earlier early in the year. This year, almost before, just as the 2022 budget went into operation, we had to amend and so the amended production direction was 1.6 million barrels per day. But in the first 4 months of the year, we realized an actual of only 1.32 million barrels per day. And so we are in a relatively new experience for Nigeria, where we are pumping significantly below our OPEC quota. This has not been, usual in the past. And this is largely due to the, what has been labeled industrial scale crude oil theft and as rampant vandalization of, oil production facilities, especially onshore. And let me make the point that it's not just the fact that we're only producing 1.32 million barrels per day. There are various business arrangements in the oil, sector, the upstream oil sector. And each of these business arrangements actually have different implications for government revenue. At the top, in terms of impact, positive impact on government revenue, are the JVs, the joint venture arrangements. So it's not just that we're only producing 1.32 million barrels, but this, the JVs which provide the highest take for government are the ones that are bleeding the most So if you're doing 500 million barrels per day, for instance, JVs versus or 500 million barrels per day production sharing contracts, the implication for government revenues is vastly different. The take is much lower on PSCs. And then the point also needs to be made when people hear 1.32 million barrels per day. Yes, government earns royalties on this entire volume of production, and of course, profit tax. But then government's share of this production is maybe about 50% of this. That's what government owns. That's what government can, earn profit oil on. And that's what's available to government, both for domestic and, consumption and export. And if government take is only about half of this, and we have 450,000 barrels reserved for domestic consumption, then that means you only have just about 200,000 barrels a day available for for export for government. I thought I should dwell on that because I read all kinds of comments in the media that show that this is not quite understood. On the other hand, oil prices have been significantly above the even the revised benchmark of $73. Unfortunately, again, while we should be celebrating this, the fact that we currently import practically 100% of our refined petroleum products means essentially that the same barrel of crude that you export at $103 per barrel, you basically effectively turn around and buy back the same crude, the same barrel of crude at about $130 per barrel. Adding, providing for
Hello, DG. I'm sure we've lost him. Sorry, Mayowa, can we still see him from your hand? I'm not sure we can see him. Okay, I think he's back. If you can hear us, DG, you can continue, but we can't see you from this end. He's not with us anymore. Wow. Can you bring him back in how many minutes, Mayowa? Okay. Okay, thank you. While we expect the DG budget office to join us, while he was talking, we had the chief economist from Coronation Bank joined us. So I wish I should give her the proper recognition. Ms. Chinwe. Ms. Chinwe Egum, chief economist, Coronation Bank. Let's give her a welcome. Thank you, Ms. Chinwe. Welcome. We also had some other gentlemen and ladies joining us, even though I don't have their names right with me here. From my far left, I saw them join us. Thank you. Welcome. Thank you. Sorry, I'm told that we have Dr. Nevin on with us now. So we'll have the second speaker, Dr. Andrew Nevin, Chief Economics, PwC Nigeria.
Good morning, everyone. Just really a great pleasure to be with you this morning. Please allow me to stand at all existing protocols, but I was listening raptly to Dr. Ben talk, and I'm sorry we've lost him for a few minutes. I'm also here in Abuja and talking to you from Abuja, so hopefully I won't have the same technical problems. So let me take about 15 minutes because I know we've lost a little bit of time, and just give a view, the sort of PwC, in my view, on the economy. And of course, you know, I've spent many sessions with all of you over the past few years. Let me start by saying I think we're really in a very difficult situation at the global level. If we go back to the great financial crisis of 2008, the strategy was to effectively create money, quantitative easing, zero interest rate policy, to get us out of that issue, the banking crisis, the financial crisis of 2008. I mean, for many years, I said I thought that policy would not work. I think we've kind of reached a little bit the end game of that, where we're now finding that all of that monetary creation is now manifesting itself in a lot of difficulties. And we've had we have inflation, we have supply chain problems. We now have the terrible invasion of the Ukraine by Russia, which is putting pressure on many systems in the world, but particularly energy, fertilizer, food sources. So when we look globally around there, we have very little good news on the economy. And I think the implication for Nigeria is, and I've said this many times, that too often we look to the global economy to help the Nigerian economy, or we look to the global economy as an excuse why the Nigerian economy is not developed properly. And I think our message has always been, it's up to Nigeria to develop Nigeria. And we shouldn't be looking at that. We can't do anything about these tremendous headwinds. But some other things that are going on that are very important for everyone on the planet, including Nigeria, is the impact of COVID and how it's changed our thinking around the way the economy should work, particularly deglobalization. So running up to COVID, we've created very complex supply chains around the world. We now understand those are very brittle. People are thinking a lot more about resiliency. In our own context, of course, food security, food resiliency is really at the top of the list. I think the other thing that's really come to a fore, and every week we're shown this, is that the climate emergency is upon us at a global level. So this week we're having heat waves in the United Kingdom, we're having heat waves in Portugal, across much of Europe. We're having heat waves, a heat dome in the middle part of the United States. We had the flooding last week in Australia, in Eastern Australia. I dread to think what the fire season is going to look like in Australia coming this year. And of course, this is something that Nigeria is not immune to. We're having, being in Abuja, it hasn't rained as much as we normally expect, but I understand we've had torrential rain in Lagos and flooding. And of course, those who've seen me speak before with slides, which I didn't bring today, know that there is a projection that Lagos will be underwater by 2050. And maybe it's going to happen sooner. I mean, particularly when you tie together what's happened with the Russian invasion of Ukraine, and then because of the pressure that puts on the energy system, you have countries like India, China, even Europe and the United Kingdom going back to using coal, which is just going to accelerate our climate emergency thing. So again, I just have very little good news on the global front. All we can do in Nigeria and Africa is cope the best we can and build up our own resiliency in that. Now, if we come to the Nigerian economy, let me start out by saying that for some time now, we've been saying that the number one issue is security. And we're not the only ones saying that. And of course, we're not security experts. I'm certainly not a security expert. I don't have any commentary or recommendations about it, other than to say that is at the top of the economic list. If there isn't security, we know now, for example, the food system in Nigeria is under immense pressure because the number of hectares being planted is lower than it should be. Farmers who feel insecure do not go very far from the village to plant. They may plant in the village as close as they can for their own purposes, but they're not growing large quantities of food that are needed in the urban areas and needed for export. So every other economic policy that we have, even if it's a positive economic policy, is not going to solve the problems unless we get a grip on the security situation in Nigeria. Of course, I only, from a security viewpoint, know what I read and when I talk to people. But certainly the 13 years that I've been in this country, living in this country, it, to me, feels like the most difficult security situation, certainly that I've ever faced. And it's impacting me personally in the way I interact with Nigeria. For example, I didn't go to a wedding in Jos of a very close friend because I was concerned about the security situation. I travel less. I'm stressed trying to go out of either Lagos or Abuja on that. I'm sure many of us share those issues. So, as I said, I can't comment any further on that other than to say it's the number one issue. Now, those who've heard me speak before know sometimes I speak about 10 themes. So we at PwC, we don't make projections. We have said consistently that we should be having 6, 8, 10% GDP growth. We need that in an inclusive and sustainable way. When we say we've rebounded, some commentators, including Dr. Ben, say we've rebounded. That's not really our viewpoint. The fact that we've had a 3% growth, 3.11% growth is far below the potential of this country. For us, 6% has always been the minimum. 8% has been a good target as long as it's inclusive and not all going to the top of the pyramid. And 10%, we had the governor of the CBN, Honorable Godwin, and affiliates come out many times and said we should be doing double-digit growth. China has done it. India at times has done it. And there's no reason, given all the attributes we understand about Nigeria, that we are not doing it. So very disappointing for us, again, to see 3%. I know it's the first time in a long time that we can say that the official GDP number is bigger than the population growth, but it still isn't nearly good enough. Now, I said before, we often came, and many of you might have heard us talk about 10 themes for Nigerian economy. We're in the process of expanding that. There's going to be a major new paper that we put out. It's now 17 themes. Nigeria is a complex place on that. But I just wanted to, in my time remaining, highlight a few of the themes and maybe give some positive direction going forward on that. But let me start out with a negative theme of the themes. And it's just this continued low investment in the country. So those who've heard me speak know I have a chart that compares the level of gross capital formation, which is economic speak for how much investment is in the country, comparing India, China, and Nigeria. And Nigeria is around 17 to 19%. India, which grows at 6 to 8% per annum in GDP terms, is about 27, 28, 29%. It's that gap that's at the heart of our problem. People are simply refusing to invest in the Nigerian economy on that. And that's been a story for a decade. I've stood up many times and said, if the government doesn't solve this conundrum, we won't be really making progress, and we'll continue to get poorer per capita. In the most recent National Development Plan that's come out, for those of you who've read the 400 pages, it consistently goes through and says 85% of the capital required has to come from the private sector. But the reality is, everyone in this room knows from the businesses that we run, that right now the conditions, you would not be attracted to put in that amount of capital in Nigeria. So I fear that we're going to continue to have, without some fundamental changes in the country, this continued low investment in that. And as long as we're only investing 17, 18, 19% of GDP back into the economy, we'll continue to have growth that is barely at the population growth on that. So that's a negative story. And of course, we also know some other negative stories. We all understand the distortions of the foil subsidy. This has become effectively a monster that's eating the country. I mean, we've watched over the last number of months, trillion, 2 trillion, 3 trillion, now 4 trillion, more than really every social service put together, 10 times more than what it would take to solve the issue at the universities that are currently on strike. And you have young people with human capital whose future and dreams are being destroyed through that process. And yet we continue to put that 4 trillion into the foil subsidy. So we all understand that issue. We all understand the issues surrounding the electricity system and the grid. I mean, we were optimistic back in 2013 in the privatization. It's turned out to be, again, a place that has not been a good home for capital. So huge amounts of capital being destroyed. We're no further ahead on the electrical system, on the grid system in the country on that. Similarly with the foreign exchange, I mean, we all understand at a certain level, the country saying we have scarce foreign exchange and let's try to put it to the uses that we think are most valuable. The problem with that is the complexity and the opportunities for diversion and round tripping and outright corruption in a system where we have multiple exchange rates is extremely high. We all understand that. I mean, we have a huge amount of FX transactions, and of course, largely occurring at the parallel market. It's occurring at the parallel market because people that need foreign exchange to carry on their affairs or run their business or invest abroad don't have access to those scarce dollars. And we have a very odd situation where we effectively only have one seller of dollars or one seller of foreign exchange in the market. So it doesn't function properly. So those are all things that we understand. I was optimistic over the last few years that we were making progress on it. Certainly the foil subsidy had been announced. In fact, the foil subsidy was eliminated when the oil price was low. We were making progress on the FX. In the last year, though, as we run into this election, we've gone backwards on these issues. Though I am optimistic in the medium term that they'll get solved. So we all understand that. So, but let me kind of leave you with a few positive things about the country. I continue to be, despite all our challenges, I continue to be optimistic about the medium-term future for Nigeria. We all understand the potential of it. I don't need to go over that again on that. But one of the reasons I'm inspired is, despite all of these challenges, every day I deal with people, and many of you, who are trying to do extraordinary things under very difficult circumstances. So yesterday is an example, just a typical day. I had managed to have a conversation with someone in the agricultural sector, very challenging sector, but was building a very powerful business, a business that is helping farmers, helping the whole supply chain, helping the off-takers on that, and was continuing under these difficult circumstances to make that happen. And that brings that inspiration of members of Lcci working in those difficult circumstances. So what are some of the positive things that are going on there? Let me start by saying we continue to be a rich country. So we put out the paper a few years ago that said we need to unlock dead assets for Nigeria to prosper, and we continue to believe that. 4 or 5 years ago it was not discussed. I think people really understand how critical that is, particularly the real estate industry, but also other real estate sector, but also other industries, or other assets that are very valuable, like the National Theater, for example, like the National Stadium. People understand the value of that, and there are now projects, National Theater being one, to bring it and make it more productive and additive rather than a drain. Of course, we still have Ajaokuta Steel, we still have the Moribund refinery, so we have some work to go. But in the real estate sector, I think it's been one bright spot for us. And every state has been working on its mapping of who owns the land so they can tax it, so they can transfer it, so people are able to get housing in a more efficient way. So I think that's that issue of unlocking dead assets. I think the country has made some progress, good progress over the last 3 or 4 years. I think another area where the country's made really good progress is state-led development. So we started talking about this 4 or 5 years ago, 6 years ago, probably now 7 years ago, pre-COVID, and said, look, if we're going to have success in Nigeria, it's going to be through state-led development. And of course, we all read the headlines often at the national level with the bad news. But the truth is that at some states, there are really very positive things going on. I was privileged to, about 6 weeks ago, to do a session with His Excellency Governor Obaseki from Edo State. And it is really incredible the things that Edo State is doing. It's doing it in agriculture, it's doing it in cultural industries, it's doing it in high-tech industries that I'll come back to. And I think this is being duplicated. I'm certainly not going to say in all states around the country, because you're all aware of states that are struggling, particularly if it's your home state. But I think there are more and more governors that are trying to do the right thing. Ekiti, Ogun, Oyo, Nasarawa, Kaduna. And again, often hampered by the security situation. But if we're going to be successful, it's going to be state-led development. And that's really something that I think everyone has recognized. The federal government's recognized that, international development partners have recognized that. I think we were the first country where the World Bank worked at the subnational level, for example, starting about 3 or 4 years ago, because we all understand that states can drive their development on that. So those are good news pieces. And then there's a,
Yeah, like 2 minutes more so that we can.
Okay. All right. So let me just leave you though with what is the right economic strategy for Nigeria, and this is one that no one is talking about. We're bringing out a major paper on it, and the point that PwC is going to make is we need foreign exchange to run this country. We aren't going to manufacture cell phones. We're not going to manufacture electrical equipment. We're not going to manufacture computers. We're not going to manufacture machinery that processes food processing for agro industries. We need to import a significant number of things. Where are we going to get the foreign exchange? We're not going to get it by exporting manufactured goods, because we're not competitive when you look at our ports and our roads and our infrastructure and our costs. Where are we going to get it? We are going to get it by exporting services. And what do I mean by that? Exporting business process outsourcing, exporting coding for employment, exporting animation, exporting football players. And of course, the greatest export Nigeria's ever had is Giannis Antetokounmpo, the superstar in the NBA. And again, that's a service. Right? We export financial services, Nollywood, culture on that. And it's happening. And it can happen all over the country. So I'll finish by citing Outsource Global, which is this phenomenal company run by the amazing Nigerian heroine Amal Hassan. 1,600 seats of educated Nigerians doing work for UK and US and European companies earning FX for Nigeria. That is the only path forward that's going to solve our FX and economic problems on that. So in our paper we're going to put out, we'd like to have 2 million knowledge workers in Nigeria working in these industries the next 10 to 15 years, and we think we can do it. But we don't see any other economic path than inserting Nigerians into valuable global economic, high value economic global value chains. And particularly because COVID has opened up so many more opportunities for people to insert themselves in these global value chains while remaining in Nigeria. So not putting more pressure with the diaspora leaving the country and going to Canada and the UK. So let me stop there. We hope to put the paper out in the next 2 or 3 weeks. And really put it on the agenda for Nigeria, like we put the diaspora on the agenda, like we put unlocking dead assets on the agenda. And now this will be the next continuation of that. So again, thank you. It's a great pleasure to be with so many friends here today. It's been a very long COVID for many of us, all of us, myself included. I've really missed this sort of interaction. So thank you to Lcci for inviting me. And thank you, friends, for listening to my comments today.
Yeah, thank you, Dr. Andrew. Thank you so much. Thank you. Thank you. We'll go to the next item on the agenda. We have Ms. Chinwe Egum, Chief Economist from Coronation Merchant Bank. She will be talking to us about half-year microeconomics review and outlook for business. Let's welcome Chinwe as she takes her session. Maiwa, our presentation, please.
Okay, so good morning, everyone. Permit me to stand on existing protocol. I have just 20 minutes, which I do not think is sufficient, but I'll do my best to stay within the time frame. So I'm going to breeze through the presentation and then I will spend some time on our outlook position. Okay, so the first slide is really, can you see the slides? The first slide is covering the global economic landscape. And what I've done here is to highlight some of the GDP figures that we've seen actuals across advanced economies. Now, the current state of the global economy will continue to adversely impact supply chains and of course, trade activity. Elevated oil price regime, which is currently above $80 per barrel, continues to spike prices in deregulated petroleum products in Nigeria, causing upticks in operational costs for businesses that are heavily dependent on products such as diesel. And that's almost all businesses. Input costs of products that are impacted by supply chain disruptions are also expected to remain high in the short term. Our view is that inflationary pressure will continue or will persist across economies. The next slide is just giving a brief representation or highlight of specific macroeconomic indicators upticks. So I'm hoping you can see this. We will share the presentation with all participants after this. But let me just say that Russia is a core player in the global oil and gas market and accounts for about 10% of global oil supply and about 45% of natural gas supply to countries within the Eurozone. And in addition, both Russia and Ukraine are major exporters of agricultural commodities, particularly grains. So there has been shortages in grains such as maize. Now, the impact of the ongoing conflict is visible through upticks seen in oil prices, as seen in my slide, as well as inflation figures across both emerging and advanced economies, so across countries in the globe. Okay, so rising inflation. I just touched upon inflation now. We've seen upticks in the headline rates across select countries. Latest inflation figures for May show that there are upticks across the US, Eurozone, the UK as seen on the slide. Now, as of yesterday, the US released its latest US inflation figure and there was an uptick. It's now at 9.1% year on year. There was also an uptick in the Eurozone inflation from 8.1%. It's now at 8.6% for June. In the emerging markets group, China's latest inflation figure increased. And I think from what we cover, China has been the lowest from what we've been tracking, but it did increase from 2.1% to 2.5% in June. Now, central banks across countries are now raising rates to combat rising inflation as elevated inflation is expected, at least in the short to medium term. I'm having a problem with the clicker. Okay. Okay, so monetary policy tightening. Obviously, this is linked to inflation. So rising inflation, we've seen that trend. And what does that mean? You're going to see central banks trying to contain inflation, contain rising inflation. And one tool that one would use to do this is through tightening policy rates. So the posture of monetary tightening is visible. We have seen a trend of rate hikes across select central banks. Notably, the US Fed raised, that's the Federal Open Market Committee, raised its key policy rate by 50 basis points to the range of 0.75 to 1% at its last meeting, which was in May. We've seen that the Bank of England has also raised their key policy rate. However, the ECB, which is the European Central Bank, lags in the current cycle of rate hikes. At its last meeting, it left the key interest rates unchanged. However, there are talks or plans to raise key interest rates by at least 25 basis points at its July meeting, which is scheduled to hold soon. Looking ahead, there is a possibility of another rate hike by the ECB in September. This is just based on statements that are coming out from the ECB chair. However, the magnitude of that rate hike will depend on updated medium-term inflation outlook. Now, we still expect reactionary responses from emerging economies. We've seen Ghana raise rates, Egypt, South Africa, and even here in Nigeria. At the last Monetary Policy Committee meeting, the committee did hike by 150 basis points to 13%. So given that monetary policy tightening has begun in advanced economies like the US, Eurobond yields of emerging economies have risen as well in response. So this slide just covers, gives a snapshot of what's going on in the Eurobond market. What we did was to just look into Ghana. We felt that that was an interesting country to observe. So now I'm going to go into the domestic economy. So that's Nigeria's economy. And the first indicator is oil. Bonny Light, which is our sweet crude, increased by about 67% to $126.9 per barrel at the end of the first half of this year. It closed at $120 per barrel as at 7th of July. Now, oil production stood at 1.4 million barrels per day. And this is, of course, lower than this is below the OPEC approved quota. That's and that is 1.8 million barrels per day. And it is lower than the FGN's budget benchmark of 1.6 million barrels per day. Nigeria's oil production is still hampered by production shut-ins as a result of crude oil theft between production platforms and terminals over the past months. Production is also impacted by low investment, poor infrastructure, and divestments by international oil companies of their onshore assets. The initial expected revenue for oil in the 2022 budget was 3.4 trillion naira. Ideally, the current oil price environment should positively impact revenue collection or oil receipts. But the presence of the fuel subsidy regime, now estimated at 4 trillion naira for 2022, and then underperformance with production undermines this revenue expectation. Furthermore, there is a visible surge in operational costs for businesses, and there's a strain in household wallets due to price surges recorded in deregulated petroleum products. So diesel, aviation fuel, kerosene, we're seeing this impacting airfare tickets as well. So inflation, we have seen upticks recorded in the headline inflation. Nigeria's food rate inflation remains a key driver for the acceleration in the headline rate. We expect further upticks in inflation, which I will cover extensively when I get to our outlook slide. The expected upticks have an adverse effect, of course, on consumers' purchasing power. So consumption patterns are going to be affected, and by extension, this would impact business cash flow, especially businesses that are heavily dependent on consumer behavior. So this next one really is just touching upon exchange rate, and I can't speak on exchange rate without talking about reserves. And so the gross official reserves declined by 3.4% to close at $39.2 billion at the end of June. Total reserves now cover 9.5 months of merchandise imports and 7.4 months when we add imported services. What we did was to use the balance of payment figures as our denominator to get that, to get those figures I just shared with you. Now, as at the 8th of July, reserves stood at $39.2 billion. The Naira closed at 425 Naira per USD at the end of the first half of this year in the NAFEX window. As at yesterday, it closed at 424.6 Naira per USD. Now, based on our channel checks in the parallel market, we see the exchange rate range bound between 565 to 615 Naira per USD. Therefore, the gap between the FX rate in the NAFEX window and parallel market is between 36 to 46%. Regarding FX injection, the NAFEX window recorded an inflow of about $8.2 billion in the first half of this year. And that is compared with $4.4 billion in the corresponding period of last year. Now, the CBN accounted for 23% of that injection or that inflow. FPI is 11.2%, non-bank corporate is 30%, and then we saw exporters accounting for about 30.5%. This slide talks about the fiscal environment, but I'm going to skip it because the DG spoke on it already. Now, this is our GDP slide. It just gives a snapshot of the trend that we've seen in the GDP or the national accounts, which a prior speaker touched upon as well. So let me just go straight into our outlook. So this is our outlook slide, and I think the most interesting part of this presentation. For 2022, our growth figures we currently see it at 3.4% year on year. What we did was that we considered stable oil price, and that's above $80 per barrel in the short term. Sustained growth in major sectors, so agriculture, technology, financial services, and manufacturing. And relative stability in the FX market. I'm referring to the NAFEX market or window, sorry. Regarding sectoral growth, we know that there has been steady financial injections or interventions into select sectors such as agriculture, manufacturing, health by the CBN. And this has assisted to an extent with keeping economic activity afloat. However, we are likely to see the trickle-down effect of the Russia-Ukraine crisis on consumer demand. We're already seeing it, and economic activity. But because GDP is an indicator that is lagged, we're yet to receive the Q2 figures. The impact of this crisis, we expect to see it in the figures that will be released, I believe, in August. We note the positive shocking growth that was recorded in the first quarter of this year. And this resulted, of course, an adjustment in our GDP growth model. For Q2, we assumed a moderation in output levels, mirroring the impact of the Russia-Ukraine crisis. For subsequent quarters, so that's Q3 and Q4, and that is your H2, our assumptions point towards increased output volumes driven by harvest and regular seasonal effects, in addition to electioneering activities. We also expect a small fiscal boost towards the end of the year, and that is something that typically happens. You'd find that during the end year festivities, there's some level of fiscal stimulus that is felt. Now for inflation, our expectation is as high as 20.6%. The trickle-down effect of the ongoing crisis between Russia and Ukraine has had an impact on rising oil prices, which by extension has resulted in a surge in prices of deregulated petroleum products. I've mentioned that already. Furthermore, prices of commodities, notably wheat, have risen, fertilizer costs as well. Given its importance as an input for staples such as bread, pasta, the price surge in wheat has an adverse effect on imported food prices and food inflation. We're seeing this when we walk into departmental stores. When you look at the shelves, you'd see the spike in prices of select products, imported products. Since December of last year, the month-on-month inflation has remained high, above 1%. What we've done is to adjust our month-on-month assumptions to reflect new economic realities. We have also taken into consideration structural issues impacting the cost of doing business, such as insecurity, expected harvest in the second half of this year, expected circulation of increased Naira liquidity on the back of electioneering, depreciation of the Naira in the parallel market, and of course, the previous hike in electricity tariffs. From our vantage point, we do not see or expect a significant decline in the month-on-month rate until July of next year. For oil, we see average Bonny Light at about $102 per barrel. I'll just share a few upside risks. So possibility that oil demand remains stronger while OPEC supply remains modest. Minimal US shale supply given the lengthy drilling times. Cautious investors and labor shortages. There's also the European Union's partial ban on Russian oil on the back of Russian-Ukraine crisis. China gradually easing their lockdown situation, and then the US summer driving season, which is commencing, and of course, uptick in global aviation activity on the back of summer vacations. I'll just go straight to FX now. We expect the FX rates to trade range bound between 420 to 440. There are multiple factors that influence the exchange rate. The external reserves is crucial. We have taken into consideration accretion of the reserves via all receipts, FPI inflows, and banking of external borrowings. Nigeria's oil production capacity continues to limit the country's ability to reap the benefits of elevated oil prices. And that is using a threshold or benchmark of $100 per barrel or above. For Nigeria, FPI inflows have been muted, especially since the emergence of the COVID-19 pandemic in 2020. Now, in an attempt to combat rising inflation, the Monetary Policy Committee did hike the policy rate to 13%. This is still below the headline inflation, which as we speak is 17.71%. And of course, that points towards negative real interest rates. And that contributes to weak portfolio investment inflows. Regarding Eurobond issuances, Nigeria raised $1.25 billion from the international capital market this year. The FGN still has room for external borrowing. However, the chances of the government returning to the international capital market this year are low due to unfavorable market conditions. I touched upon that when I was discussing the global landscape. Now, barring any large outflows, we see reserves at plus or minus $38 billion by the end of this year, which should be sufficient to defend the Naira at current levels. From a supply perspective, which I think is important to discuss, the CBN has accounted for an average of 25% of total FX inflow into the NAFEX IME window. There are speculations that the CBN will stop or halt FX sales by the end of this year on the back of the RT 200 FX program. Under this program, the CBN expects banks to start sourcing their FX from export proceeds. And of course, this is in line with its commitment to boost countries' foreign reserves. Now, just to conclude, given the current macroeconomic environment, which has brought with it elevated inflation, FX depreciation, sluggish or expectation of sluggish GDP growth, among others, we expect businesses to focus on optimizing their working capital while mitigating the risks arising from high inflation levels and FX depreciation. This is because optimal working capital would provide adequate cash levels for corporates, allowing them key into tactical opportunities and of course, tackle unforeseen business scenarios and expenses. It would also provide increased flexibility to fulfill customer orders, as well as expand and invest in new products in order to stay competitive. Given what's going on with inflation and how it's impacting consumer pockets, it's imperative that businesses stay at the top of consumer spending priority list. That said, there is an extensive list of products and services that we offer at Coronation that would support business growth and expansion, among others. I have included it to the deck, and of course, it will be shared to all participants by the organizers after this event. So thank you for listening.
Once again, please let's appreciate Ms. Chinwe. Thank you so much for a well done, delivered message. Very clear. I know you have so much to say, but because of the time, you had to put up everything in less than 30 minutes. Once again, thank you. We'll go to the next item on the list. Just to announce that we have tea right behind us. If you wish to pick take a copy of a cup of tea, please you can avail yourself one. There may not be a separate time for tea break. That needs to be said. Now we want to go into the next presentation where Mr. Taiwo Oyedele from African Task Partner, PwC Nigeria, will be having a session. Let's welcome Mr. Taiwo Oyedele. Mr. Taiwo, welcome, sir. Okay, I think it's up. It will be up.
Thank you very much and good morning. I'll stand on existing protocols given that I have only 20 minutes to talk about tax. I'm not sure that people like to listen to tax presentations, but they actually don't have a choice because whether they like it or not, they have to pay taxes. So the topic I have to speak to in 20 minutes is the future of taxation and implications for business, new trends in Nigeria's tax system. The economists have done a great job of setting the context from the economic perspective. So I will not repeat what they have said. Okay, I have my slides on now. Right. Okay, so they didn't put the PowerPoint version, but we can manage. Okay, so I think the context is that I usually like to broaden the conversation about tax to include the fiscal landscape, which is revenue, spending, and debt management or public debt. So Nigeria's tax space is challenged. We have structural issues. You know, this one that, we quickly tell ourselves is COVID-19. It's Russia and Ukraine. It's easy to find excuses if you are looking for one. These same issues affect all the countries in the world, and some are doing well. We have to also say that some are doing worse than us, like Sri Lanka, right? And whenever you see a country that is struggling despite the global challenges, it's always down to policies. So they are self-inflicted. So if you do a ratio of 1 to 100, the percentage of our problem that is imposed on us by external factors, in my honest view, is less than 20%. The bulk of it is self-inflicted, which also means that the solutions lie within our borders. It's within our territory. It's not, I know we like to pray, but God is not going to do for us that which he has empowered us to do for ourselves. So we don't have revenue. We are borrowing. And it's even more painful that the way we are applying those borrowing is, in my view, is counterproductive. So if I ask you actually, and I say, what do you think that the bill for petrol subsidy will be by the end of the year, for this whole year? What would you say? 6 trillion, we had 4 trillion, we had 6 trillion. I think it's going to be more. Let me tell you, we've never been very honest about the cost of subsidy. On one hand, we don't even know what we consume, which is a big embarrassment. You don't know how much petrol you consume. And I listened to the National Assembly saying NNPC is the sole importer of petrol. They say they import 63 million liters per day. How can the consumption be more than what you are importing per day? Consumption is more than what we import. Anyway, let's park that. Now, even the true consumption by Nigerians, the calculation, in my view, should be first, the cost price is more than we are paying. Number two, there's FX subsidy. You know, for petrol, they take our dollars, which is officially 415, to import it. Diesel guys don't get that 415. That's why diesel is more expensive. They told me about 70% of the amount for diesel import they get from the parallel markets. So that's already about 50% subsidy coming from FX. On petrol subsidy, let me also tell you, that 4 or 6 trillion we are talking about is not money we generated, it's money we borrowed at double digits. So let's even say it's 15%, right? Add it on top of that. All over the world, the taxes on fuel products is between 20 to 80% of the pump price. Let's say Nigeria is at the lower end of 20%. By the time you sum all of this up, my honest view is that whatever is reported as the cost of petrol subsidy, just multiply by 2. That's the true cost to our economy. And sadly, it's not even benefiting the poorest people. So what are the trends in the tax space? So I have a summary here that looks at new taxes and new increases, government trying to rationalize incentives, and some tax breaks. There are very few. Then impact on small businesses and other reforms. So government decided in the last Finance Act that education tax should increase from 2% to 2.5%. And I won't bore you with the details, but whenever you see education tax multiply by 2, that's the impact it has on a company in terms of company's income tax. So I looked at the past 10 years and I saw that we've collected over 2 trillion from education tax that companies, you guys, paid, yet universities are on strike. And I kept saying to myself, what's the essence of these 2 trillion we collected if it's not solving our problems? I decided to look at some of their reports from the TET funds. You need to see what they are doing with that kind of money. The universities are not even better than governments. Some of them are mismanaging the fund. So this will not solve our problem unless we address the fundamental issue. The National Assembly, in their wisdom, thought we need to pay more. So they've increased it from 2 to 2.5%. We now have capital gain tax on shares. If you sell your shares in the capital market and you cross certain threshold, and they said, if people take too much sugar, you must pay excise duty. That's the reason why people are having diabetes up and down. We look at data, data did not support it. The consumption of sugar in Nigeria is less than the World Health Organization prescribed threshold. Less than, I think it's 8 kg per annum instead of 9. The likes of the UK and the US are somewhere around 40 to 70. So those are the guys who have sugar problem. In fact, I think my view is that Nigeria has a carbohydrate problem, not a sugar problem. Plus, if you impose that tax on production, but I can go to the mall today and buy plenty of sugar and put it inside Gary, I will not pay that tax. It doesn't make a lot of sense to me. In an economy where the manufacturing and every single sector is struggling, why impose a tax and why now? Then they said engineering and science is also very important, so we need to pay tax so that we can grow science and technology. A new tax has also been introduced. While we're still complaining about that, they say even police too require some funding. Police tax was introduced. You know, we had a session, I think it was 2 weeks ago in Abuja for NECA, and the speaker was there, and I was complaining to him that you guys have to stop introducing new taxes for everything. You know, when we finished that conference in the evening, they said they just passed another one to introduce a new levy for NYC scheme. And I said, when will this end? When will it end? The reason why countries collect companies' income tax, personal income tax, VAT, and those other taxes is so that government can prioritize what they want to spend the money on per time. You can't come back to me and say the roads are bad, road tax, police need funding. Me too, I need funding. Maybe they should introduce one for me. LCCI, maybe you guys need to propose for LCCI tax because you guys need, as you levy. Anyway, so we are tired. I have to say to you, we are tired of these too many taxes. And there's no data to show that the more taxes you introduce, the more revenue you collect. In fact, the contrary is true. In countries where they make a lot of money from taxes, they have less than 10 taxes. In Nigeria, officially, we have over 60. Unofficially, there are more than 200. And I'm saying this based on facts, okay? So we can't continue like this. Government also said, well, let's try and use technology to find people who are evading taxes. I agree with that. In fact, one of the things I've said is, you know, when you want to make prediction about what will happen to the economy and taxes, you can always say, based on textbook analysis, that if government is borrowing, you expect taxes to rise in future because they need to collect the money from you to pay the borrowing, right? But the good news about Nigeria is you can make that money without increasing taxes, without introducing new one. In fact, by repealing existing taxes, because the bulk of your tax revenue is with evaders, tax evaders. And even some of them are facilitated by government. In fact, the highest evaders in Nigeria are in government from MDAs. MDAs will collect VAT and withholding tax, and they will not remit it, and nothing will happen. You know, in Nigeria, you can do a lot of things and get away with it, right? Nothing happens. When nothing happens, it's an incentive for you to do that which is convenient for you, not necessarily in the interest of the public sector or for public good. So the other reforms and changes we have that I thought I should share with you include the fact that the National Assembly attempted to introduce VAT on the exclusive legislative list. And I said, that's not wise, right? We're saying that fiscal federalism, more power to the state. Governor Wike went to court and court says the man is right. We're at appeal trying to find out who is right and who is wrong. And then you want to amend the constitution to say, actually, this VAT should be tax of federal government. It's not making sense to me, right? So thankfully, they did not succeed. But the fact they attempted to do it for me is still annoying me. Because what we should do is to put it in the concurrent legislative list, but let it be enacted centrally by the National Assembly. You know, like personal income tax is centrally enacted, but collected by states. I'm not saying states should collect VAT, by the way, because I also don't trust them, right? But at least let's enact the law centrally. let's collect the tax centrally and address the problem about how you share the revenue from VAT. That's where the problem is. You use derivation only, don't use population, don't use equality, based on the activities conducted within your territory. They also said they're going to establish revenue courts. I think this one is good. So you have revenue court to deal with tax matters. FRS said, if you don't have certificate of acceptance for your fixed assets, you'll not be able to claim capital allowance. So where is that written in the law? So, man just called me even while I was here. We're having a meeting with the FRS next week to sort this out. We cannot afford to continue to complicate the already difficult business environment in which we find ourselves. There is the 2022 fiscal policy measures, in case you are not aware, that now says you have to pay 5% excise duty on telecommunication. So when you make calls, you use data and all of that, your costs will go up. The good thing about this, Nigerians will not know, because you still buy your recharge card at 100 naira. I know people in this room don't buy recharge card. They are on postpaid package. But whatever it is, you still pay what you are paying for before, just that it will run out faster, right? So that way people will not immediately object. While they were working on this, I had recommended that the 5% should only be on postpaid packages, because those are usually middle class and high-end people. But they decided to impose it on everything, so we have to deal with it. The other one I should tell you about is that there's a VAT modification order that says all fair products should not carry VAT except diesel. I don't know whether they're charging the VAT, but that is a problem, right? Diesel is already out of reach. Many people can't operate their businesses anymore, right? To add VAT means it's going to be impossible. Then they said, if you export non-oil products, it used to be 0 rated for VAT. What that means is any VAT that you have incurred, you claim it back from government so that your product can be competitive when it gets outside. They've changed that, and I don't understand it. Because on one hand, we said we don't have enough FX, we need non-oil exports, but then the policies are the opposite of our desires. They will not magically converge in our future if our aspirations and the actions we take are not consistent. Then, there is what we call the 2-pillar solution. Globally, they said these technology companies are making plenty of money, but they're not paying taxes. And they don't need to be physically in your country to make money from you. So the world came together and said, it's not a problem any single country can solve. Let's solve it together. They also called Nigeria to join. They call it inclusive framework. And in fact, for the first time, Nigeria was represented in a committee globally that I know of by someone who was competent to represent Nigeria. Usually what people do is they go to those places and they sleep because they spent all the nights doing shopping and gisting. So when they get to the meeting, it's too complicated for them, they just sleep. When it's time to travel abroad, you don't send the most competent, right? You send the most senior person, the most influential. So they just nod and sign. This time around, this guy did a good job. It's a guy called Matthew Bonjubola, a director at FRS, did a good job and came back to Nigeria and said to them, it is your duty whether you want to sign or not, but I'll tell you what it is. These guys have agreed that the companies that will be liable to tax will be those who make 20 billion pounds in revenue in a year. Condition number 1. Number 2, that have profit of at least 10%. Condition number 3, if they have excess profit over and above that 10%, we'll take 25% of the excess. We now share it to so many countries. When the man calculated, he said there will be only 6 companies in the world that will fall into that category that have anything to do with Nigeria. If you calculate how much you make, it will be a tiny fraction of what we are making on our own. Because that international agreement says once you sign, you must not implement unilateral measures. You must roll back. So that's the reason why Nigeria has not signed. That's the major reason. So we now have what we call significant economic presence. We are trying to do our own, on our own and by ourselves. According to FRS, it seems to be working. So you will see some of us who have social media accounts. You must have received emails from LinkedIn, from Google, Facebook, telling you that they will start charging VAT. This is part of the reason for that. We have major decided cases by the court. One of it is that the police levy I just told you about, Rivers State went to court and said, by the way, how can you collect taxes from people and put in a dedicated account? When the constitution is very clear that when you collect taxes, you should go to federation accounts. The court said Rivers State is right. You know, whether you like Wiki or you don't like him, the fact is he's getting court judgment and challenging things that many of us just took for granted before. And I think that is good. Now, the complication for business people is that, what does that actually mean? The court says you cannot collect tax and put in a special account. It can only go to federation, which means we share it, right? But that law did not say that it is illegal to collect the tax. So as a business person, some people have decided to say, me, I will not pay the tax because the court says it's unconstitutional to put in a special account. My honest view is that you still need to pay the tax. Where they put it is not your business. But if you don't like to pay, you to go to court and tell the court, based on this judgment in Rivers State, do you think I should still continue to pay this tax? Maybe SCCI should do that. And let's see what the court will say. There's no time, so I'll move on and conclude quickly. So what are the implications for businesses? Number one, we have policy-induced uncertainties, creating impediments to businesses in addition to overregulation and the other challenges we have around. Number two, earmark. These taxes we assign to different projects. Earmark and multiple taxes increase the tax burden as well as cost of compliance and impact negatively on the ease of doing business. The other one is that these new formal taxes are the ones legislated by governments and collected by government. They add to informal taxes. These are the taxes you pay to non-state actors, and they're all over the place. And implicit taxes. These are the things you use your money to do, which ordinarily should be done by governments. So in Nigeria, if you're trying to calculate your tax burden, you must add three components together: formal taxes, informal taxes, and implicit taxes. And I can tell you, they are out of this world when you finish adding them up. Lastly, there is limited engagement and consultation with stakeholders. There is some level of consultation, but it's limited. And you know, I support many of the organized private sector groups, and it takes average of 6 months to 1 year to get a meeting with government. I can't understand it. I traveled to another country in Africa, had conversation with my office people from there, and I was very impressed with what government was doing. And I said, get me a meeting, and they got it the following day with a head of government agency. I say, in Nigeria, this would have been a miracle. Me from a strange country, they gave me audience, 24 hours. So the fact that you're not having sufficient engagement also means that some of the policy design are faulty because they're not based on hard evidence. And sometimes the implementation is not practicable because you haven't engaged enough. All of this, I know it is a little bit graphical the way I've put it. I said it's almost like there's the knee on the neck of businesses in Nigeria. We need to allow them to breathe. And hopefully, I pray, we will not end up with Sri Lanka's situation. So what should we do? No, we can't give up and we can't sound hopeless because it's our country. Many of us have decided that no matter what happens, this is home. I don't feel at home anywhere else in the world. So I'm not leaving Nigeria for any reason. So we have to fix it together. Some of the things we need to do is let's be proactive. Maybe the more of us are speaking up, you know, someone will be forced to listen. One thing I know about politicians is even when they are dictators, they respect public opinion. You know, wherever people are saying they want to join them, it's because they know what it means. So maybe more of us should speak up. Let's engage proactively. Let's use evidence and data for our analysis and advocacy. Let's manage our stakeholders in terms of communication. Let's seek understanding of these important issues. It's not only about Muslim ticket that is important. You know, Nigeria, once they find one story, everybody just queue behind that story until another one erupts. Muslim ticket is the top issue now in Nigeria. Let's use different platforms to engage and build public trust and then help our country. So my final quote is this quote by Abraham Lincoln, who said, "The best way to predict the future is to create it." Thank you very much.
Thank you so much. Let's give him a round of applause again. Sincerely, I'm tempted to refer to him as Dr. Taiwo. I'm taken away by Mr. Taiwo Yedele's eloquency and motivational way of presenting his fact. Thank you, Mr. Taiwo. Thank you. Thank you again. We'll go to the next thing on the agenda. We are doing well with our time in a way. We'll have Dr. Afolabi Olowokere, Head of Research, Securities and Exchange Commission, SEC, talk to us online. I want to be sure we have him now. Maya, do we? Is he with us? Dr. Afolabi Olowokere from SEC.
Okay.
Dr. Afolabi, can you hear us?
Yes, I can. I can hear you. I'm trying to bring up
Doc,
my presentation. Yes, I can hear you.
You have the floor.
Thank you. Okay, it's still morning. Good morning, everyone. It's a great pleasure to be here. And I also stand on the existing protocol. I'm sure quite a number of persons have spoken before me, and a lot of insights have been shared. So I'm doing the presentation. Dr. Biodun Adedupe was supposed to be here, but he has asked me to do it on his behalf. So once again, good morning or good afternoon, everyone. So I'll be speaking on this conference is on the Media Economy Review and Outlook, and I will be speaking on the budgets and the evaluation so far at this half year. And I will also be looking at the implication of that for business. So I'll look at the snapshot of the budgets. I'll look at the crude oil price and production, how those have performed in the last 6 months. Also compare that with what has happened in this corresponding period of last year. We are going to look at distribution of FAC, what has gone to different tiers of government during this year. We look at Nigeria's debt, fiscal balance. Then we'll speak on we'll take some key points and then look at the implication for businesses and also opportunity that businesses can derive. So this is just a snapshot of the 2022 budget. We know that is an approved expenditure of 17.13 trillion from the proposed of 16.39 trillion. And also in 2021, we have 13.59 trillion. Capital expenditure is about 32% of the budget. And we also have top ministry by capital expenditure, which are works and housing, agriculture, defense, education. We have their 2022 budget. For instance, works and housing, we have about 470 billion in capital expenditure. That is coming from 399.69 billion in 2021, which is like a 17.63% change in that. In other words, these are the top 10 or 12 capital spender for the country. There are specific plans and initiatives on the expenditure side. Government plans to complete major roads and rail projects, effective implementation of power sector projects, construction of irrigation infrastructure. And there was also a supplementary budget presented by the president for subsidy for the second half of the year. I think previous speakers have mentioned the issue around subsidy. I think it's just a very big elephant that we need to deal with in the country. In terms of revenue, the budget is looking at 10.74 trillion. That is FGM plus its government-owned enterprises. That is going to be coming from an 8.12 trillion in 2021, which is like a 32% increase. Assumptions for the revenue, $73 per barrel for oil price, currently at over $120 per barrel. Oil production, 1.6 million barrels per day. currently at around 1.2, 1.3 million barrels per day. Of course, you can still have the condensate of about 250 or 300,000 that the country does. Exchange rates assumption in the budget 410 naira per US dollar, currently at around 416. But we all know that there are different windows and there are some rates that are far, far higher than this. It then depends on what the businesses are exposed to or the percentage of their allocation that come from this official market as against other window that they may be patronizing. Growth of 4.2% at Q2, 3.11%. IMF is projecting 3.6% for us this year. Inflation assumption in the budget 13% originally, now at over 17%. What are the policies? Government want to enhance tax and excise revenue through policy reform and tax administration. They want to review the policy effectiveness of tax waivers and also safeguard revenues from the oil and gas sector. Deficits about 6.39 trillion from about 5.6 trillion in 2021. Financing largely domestic borrowing, foreign borrowing at equal values, and then multilateral and project loans about 18%, while privatization will just be a very small component of what will be used to finance it. So government plans to grow revenue to GDP ratio from the current 8% to about 15%. And that 8% is actually general government, not only federal government, because general government would then mean federal government, states, as well as local government. Currently, we do less than 8% of the GDP, but the projection is to go to 15% by 2025. I think that also comes from the National Development Plan. What has happened to the oil price? As I've mentioned, this chart, the first one is comparing 2021 and 2022, the same period, January to June. We can see that oil price this year, which is the deeper blue color, has dwarfed the 2021 corresponding values. In May, for instance, May last year, $68 per barrel. May this year is at $115 per barrel. In June, $72 per barrel. June last year. June this year, $125 per barrel. So we can see that we have gained a lot in terms of prices of oil. But when it comes to production, is the reverse, right? The deeper blue colors are now shorter than the lighter blue colors. June last year, for instance, we were doing about 1.4 million barrels per day, while we are doing less than 1.25 million barrels per day June this year. Well, these are sourced from the secondary sources of the OPEC database. When it comes to the allocation, FAC allocation, we can see that in the last 6 months or the first 6 months of the year, the sum of 3.3 trillion, last year, sum of 3.3 trillion was shared. And so far this year, about 3.7 trillion has been shared. And the graph also shows what has gone to federal. The federal government has been able to realize about 1.48 trillion so far this year. And then last year, corresponding period was about 1.36 trillion. There's a slight improvement in this year over last year, the same period. However, not very big difference exists. The same thing is also shown for January, February, up to June in the upper part of the chart. When we look at fiscal performance, debt is a major part of it for many reasons. Deficits, new deficits will be added to existing debt stock, and then that will then be the second period debt value. The other point is that you also have to service such debts, and when you do, it's also part of your recurrent expenditure. So March 2021, our debt was 33.11 trillion. Currently, we stand at 41.60 trillion by the end of March this year. We can see that our debt has increased a lot, about 8 trillion in the last 1 year. The lower part also show FGM bond auction. Federal government auction this often like 3 times every month. We can see that so far this year, the government has issued quite a number of bonds. In June, for instance, federal government has allotted, this is amount allotted, because often the allotted are far, far larger than the offered. The oversubscription issue, people want to put their money in debt instrument, in fixed income instruments, despite that the rates are lower. So it also shows something in the economy that what happens to real investment when people when the real investment environment is not very conducive, you can have a lot of money pursuing fixed income instrument or financial instruments. So federal government did about 226.1 billion so far this year. I mean, in June of this year. So this is, I think I was actually waiting for the DG budget to make his presentation because, I mean, that office has done a great job by also making available the budget implementation reports, which is always very detailed to make this kind of comparison. But some of the figures that we have, at least for the first part of this year, has shown that we've been able to have retained revenue of about 1.16 trillion in the first quarter of this year. And that is going to show about 41.61 negative variance from when you prorate what should be in the first quarter of the year. Expenditure are also falling short a bit of what is planned. However, not as much as the falling short of the revenue, which should then have implication for balance, right? So capital expenditure has also fallen short for close to 40% so far this year. The same thing holds for when you try to even prorate up to the half year, using what happened, percentages of what happened last year to see what happened. In other words, it's a major challenge to the country. What are the key points from this? I would like to summarize what I've said so far and then look at the implications and opportunities for businesses. The key points are that the planned expenditure is relatively high this year at 17 trillion, especially for infrastructure and other key MDAs. Enhanced tax stripe and rationalization of waivers and concessions are things that government wants to do. I mean, the last speaker spoke a lot about government introducing more taxes, trying to get as much as possible from businesses, further making it maybe more and more difficult for business because government also wants to get more revenue, although there are discussions about how best can that be done without levying additional taxes, especially on those that are already paid. Huge borrowing of over 5 trillion is planned for the year. Oil price is significantly high, and that is expected to be a blessing. But the country has not been able to take advantage of this low production due to low production and high cost of importing refined fuel. So you can't produce more. You know, the simple law of demand: the higher the price, the higher the supply. So this one will be like an inverted supply curve. That's Ecuador one, where you have higher prices, but your supply is actually getting lower because supply also, not only is it a function of pricing, it's also a function of technology and some other production things that you have put in place to actually make you more productive. Another problem is that when you even make the money, you're also buying refined fuel. So it's like getting the money from the right hand and paying it out on the left hand. And inefficiency around the system is also not making it clear on the size of the subsidy. So rising cases of oil debts and delivery short of oil wells. There are cases where some of the operators themselves are to shut off their oil wells and pipelines because they want to avoid oil theft. And that also makes it like a double whammy of problem. Fact distribution is still low and is yet to improve. Revenue challenges currently limit budget performance and is mainly affecting capital projects, also leading to high deficits. Subsidy removal and fuel availability are major discussions. There is always issues around the new subsidy, but sometimes also when fuel prices go up, is always a challenge. People that are using diesel are complaining seriously, and then a lot of production line are on that. So what do you do? How do you balance such needs? It's a big trade-off which economy is actually on about. Exchange rate is still a challenge to businesses. The Russian-Ukraine war is impacting on energy and other commodity supplies and prices. Generally, the macroeconomic environment is still weak for Nigeria. There's high inflation. People have said that since we started this conference. There's high unemployment. There's low growth, and there's an uncertain exchange rate regime. So what are the implications of all this for businesses? We know that high expenditure on infrastructure is expected to ease business operating environment. Of course, there are good roles, there is power. If there is power, for instance, probably will spend less paying the distribution company than buying diesel. And that will also limit the volume of importation, or even if we are even producing locally, our consumption of fossil fuel. But revenue challenges has constrained the realization of some of these benefits. Subsidy removal for businesses, the pros and cons have to be done properly. If I'm a business owner, I will ask my head of strategy or research if they remove subsidy, what would the price go to, and by how much would it fluctuate every month, every quarter, every year, and can we bear it? Because sometimes we have to know the pros and cons of everything that we want to do before we support or oppose any activity. But when we do, we should also not just look at our own side. We should look at the general economic environment. What is the best thing to be done? Do we need to first understand, have a transparent subsidy regime first to even know what is the size of the subsidy, to even know whether it's something we can bear or we cannot bear? And what will be the implication on prices? Of course, when you remove things like subsidy, you must also make sure that the market is also free of entry and exit, but that's what the economy preaches. So those are issues that businesses need to consider. NPR has increased to 13%. It has implication on cost of capital. If you are a borrower, definitely you have to pay more. It also has to be on portfolio rebalancing. If you are investing in stock before, you also want to see, do I go to fixed income? If you are doing fixed deposits, what kind of instruments should you do? How are the assets you are investing in priced? What is the rate at which they are priced? All these have implication on our investment profile. High debt and borrowing often crowd out private sector, as we know fundamentally. Contractor businesses may suffer if there is low government revenue, especially at the subnational level. It will affect both subnational and national, but federal government can borrow, I mean, that's a sovereign, can borrow, DMO can easily issue bond and even mop up the excess or over subscription. But for the states, it's very much more difficult. Some of them are food contractors. Some of them are looking for PPP arrangement that they don't have capacity to really develop. And I'm very sure as business owners, we are also thinking about how to partner with our state government to provide amenities to people that are cost reflective, right? Or cost recovery. Importers will definitely suffer from foreign exchange problems, depending on the window they are exposed to. And then they also suffer from global supply constraint from the ongoing war between Russia and Ukraine. What opportunities exist? Or how do we solve some of these problems? We need to hedge our foreign exchange exposure, however we can do, whether it's done internally by having investment in different parts of the world, or any dollars, whatever business we can do that will show that we can export so that we can solve part of our problems. Because if you earn naira and consume, you may not be consuming in dollar, but you are consuming something that is converted from dollar to naira. You are exposed to foreign exchange movement. Or sometimes it's multinational. Multinational kind of have internal mechanism for hedging foreign exchange risk and exposure. Or externally by investing in derivatives and other financial instruments that can assist us to, whether they are pure derivatives or they can be forward or future markets, so that we can lock in into the future. We may need to be seeking partnership and expansion that can lower our cost of capital. However, this is defined. It may be a particular business that has a way of doing something better than we do, maybe because they have technology. We must just find a way to lower our costs, because if cost is going up at this rate, it's a problem to business, because there is a limit to how you can increase prices, especially when you have higher unemployment rate at over 38% as at the last figure, and underemployment rates added to that more than 56%, everything just well. So more than half of Nigerian labor force who are willing and ready to work do not have good jobs, and many are poor. So there's a limit to how you can increase your cost. So you must also be working on how you can increase your price. So you must always be working on how to lower your cost to remain competitive. Are there possibilities of producing local substitute for imported products? What are they? What are people importing? Are there local substitutes that can be cheaper? If it's possible. I mean, if you are able to go over the cost.
Thank you, Dr. Lcci. Thank you. Just 2 more minutes.
Yes.
Just 2 minutes.
Yes, I'm on the last slide. So can we also find a way of going to alternative energy? Some of them are expensive, but we need to do some cost benefits for the long run benefits. Cost benefits for the long run benefits of them. Then can we have local companies that can produce components of alternative energy sources, especially for the masses? There are quite a number of opportunities in this area that people will start consuming them as you go forward, especially into zero emission era as we move forward as a country. Thank you very much.
Thank you, Dr. Lcci. Thank you so much. We enjoy your session, I must say. Thank you so much. We go to the question and answer now. Let me bring up to the stage 2 of our discussants for the question and answer, while I will have Dr. Ayo Teriba, who is the Chair, Economic and Statistics Committee of LCCI, will moderate this session. Let me bring up Ms. Chinwe Egwim from the Coronation Merchant Bank to the stage. Also, Mr. Taiwo Oyedele to the stage for this session question and answer. Mr. Taiwo. As I said, we will have Dr. Ayo Teriba, Chair, Economic and Statistics Committee of LCCI, moderate this session. Dr. Ayo, sir. So, as usual, we have 20 minutes for this session, Dr. Ayo.
Thank you very much. Please, could you check and let us know how many of the discussants that presented online are still available to respond to questions?
Okay, for our discussants online, I'm told that we still have, I can't see your hand, Mayowa, 2? Okay, 2.
Who and who?
Who and who? Okay, Dr. Falabi is with us. Then Dr. Ben Akabreze is also with us.
Thank you. So Andrew is no longer online. Okay. Thank you very much. Good afternoon, everyone. We are grateful to the Lagos Chamber of Commerce for keeping the promise to organize this session. That promise was made when we had the budget session at the beginning of the year. And it's gratifying to also observe that the budget office of the Federation also lived up to the assurance we were given at that session that it will be important that they are also a part of this process. So we are grateful to the budget office for giving us a media update. We had debated the figures in the Appropriation Act when we met at the beginning of the year. And it's really good that today we have updates as to what happened in the first half of the year. And therefore we can adjust, we can reconcile those intentions with reality as they are beginning to play out. And we thank our discussants for giving us the benefit of their wisdom. We all had them. So in the few minutes that we have now, I want us to make our comments. We may not be able to give the mic to everybody who desires to make a comment. Nonetheless, we can still take all the comments. So please, I'd encourage you to write down your comments, indicate who, which of our discussants are meant for, and put your name. So if I can receive that, I can give it to them so that they can, as they are listening to the few that we can take, they can also look at your questions and respond to them. So please, are there people who will go around and help us?
Yes, we have people who can get the question as well. We can also have anyone that has questions can just put up a hand. We take the questions, then they can take the answers right here immediately.
On that note, I'll ask that those the few of us who would like to maybe take 1 minute to direct our comments or questions to any of the 4 discussants that are still with us, please signify by raising up your hand. Okay, let's quickly take those 3. Assign numbers.
Yes, that is one. Yes, then we have Daddy also.
Okay, let's quickly take those 3. While we can be writing down, you know, because there's somebody at the far end who is waving. So 4. Quickly. Thank you.
Thank you very much, Rob. My name is Prince Lepa Fadino.
Prince Ferdinand, you're welcome, sir.
Let me first of all congratulate the chamber. As you rightly mentioned, some of us were here at the last budget review, and it shows the seriousness of the chamber in addressing this issue. My first comment is to Ben. Ben, you know ourselves very well. All I would like to state is that your presentation was honest. I'm not here to put you. I mean, we know ourselves very well. However, one thing that worries me is I would like to know your reaction that we need more of Ben in government. To the taxman, again, let me also congratulate you. If you had said something, I would have been disappointed. In fact, by the time you are walking out, you know me, I would have told you that this is not what you are supposed to do. However, I think something is happening. And that also makes me to address the initial comment made by the president of the chamber. We need to engage in dialogue. Business and government must engage. I was one of those people who set up, 7 of us set up Economic Summit in 1993. And I also recall that when we had this first session, one of those who are with us that late evening was Ambassador here, who was sitting down here in Chief Shunekon's house. Why did I say that? Olumide, the philosophy of setting up Nigerian Economic Summit has been defeated. Please, Chamber of Commerce, go back, reassess it. What does the business need and how do we approach it? My last point is to a lady. I'm a bit worried on the role of banks. I know in most cases it's not your money, but why is it that these days most investment are going to debt and not to equity? That raises a point. what type of investment flow are we promoting? Thank you very much.
Good afternoon. My name is Engineer Jibade.
I will take all the questions before we.
Africa. My question is, I can observe that if you look at the outlook, the GDP of 3.14, we are seeing it in the figure, but it's not reflecting in the lower pyramid structure of the country. So is this that we're having a capital flight to make sure that our gains, in the Nigerian outlook, we always see the negatives in most of it, but sometimes with this, we're having some positive. But those positives, we are not trapping it down.
So get the name of
Engineer Jibade is my name.
Okay.
Alpha Crown. So we need to actually see how we can trap down our benefits, our advantages, which we are not seeing trickling down the lower echelon of the pyramid. So what are we trying to do? What will we be doing to that? Then secondly, I also would like to, throughout the outlook, we are not talking about infrastructure and local context policy as it affects Nigeria. That's all.
As the third question, we have one more after that. Please, can somebody go around and collect written comments for us, please?
Thank you.
Yes,
sir.
the floor is yours.
My name is Dr. Remy Allo. Please forgive my cracking voice. Lagos Chamber of Commerce and Industry. In discussing this important topic, economic review and outlook, what is the role of the insurance sector in risk management of economic activities?
Thank you.
Insurance of assets generating economic activities, and insurance of the humans producing the goods and services. We must also bear in mind that insurance is the handmaiden of all businesses.
Thank you. Last question. Yes.
Good day. My name is Bakari. My question is, I'll direct my question to Chief Economist, Chinwe Ekwe. And the question is, why is it that our refineries are working in Nigeria? And number two,
can you increase the volume a bit?
Hello.
Yes.
Okay. Yeah, my question number one is, why is it that our refineries are not working in Nigeria? And number two, we've been told several times that we should diversify the economy, we should diversify. And yet, we come back to summits, and governments are yet to implement these solutions. So those are my two questions: diversification and why isn't our refineries working? Thank you.
Thank you very much. Okay, those are the 4 questions, and they were directed, at specific discussions. I think we should listen to the DG Budget Office of the Federation first. So please, Ben, if you are there online, kindly take the floor and respond to those issues that were directed at you, or those issues that you feel inclined to shed light on. Thank you.
Thank you. And for my Lecon Ferdinand, well, I do agree with you, even though it might sound to say that many more of us need to be in government, and really, there's no solution. There's no alternative to it. So if we want to be in a very safe, corners and just play the role of critics, this system isn't going to change. This system isn't going to change simply by our criticism. It's going to change by us getting into the trenches, rolling up our sleeves and putting in the work doing the heavy lifting that needs to happen. The problem is they're just not enough. They're not enough, competent people. They're not enough pro-reform minded people in government. And at the end of the day, whether you like it or not, it's not, the process of decision making in government is not as easy as people often think. It's very complicated. And when you get into a room, sometimes there's voices or the numbers that have their way, not necessarily the most persuasive, argument. So, some of us are here. My salary is less than what I earned over 20 years ago as bank MD. So in your corner, you need to get, and as I think what I would have said, this is the country, we have to dig in here and try and get things to change. But of course, even honest, persistent engagement does help. And so I agree again with my, fighting on that. Business and government must engage in constant dialogue. You see, this occasional, half yearly or whatever event, as great as it is, look around here now, how many government people are here? I don't know. I see myself, I see online, there's someone from Lcci. But again, these gatherings tend to be, basically, remind me being, my other calling of a pastor. These gatherings remind me of, the pastor preaching to the choir. We gather and we're preaching to the converted. When we arrange this session, there has to be a more concerted effort to bring in the policy makers to attend, to get them to attend, to do whatever we need to do if we really desire results. If it's, if moving the thing to Abuja will get more people into the room, so be it, if we really want, but if we just want to gather and speak to ourselves, that's the other thing to do about constant dialogue. I said this I think at the NECA event that Mr. Idele referred to earlier on. The private sector needs to invest in having watchmen in the National Assembly, people who resume there that, follow. There's no legislation without public hearing. So all of these laws that come out with taxes and whatever, and by the time they come out, we're complaining, it's too late. It's already the law, it's signed, it's law. So talking about them at fora like this, it's too late. The process of reversing that, we need to track what's going on in the National Assembly. That's how it happens in democracies. Engineer Ajibade wondered why GDP growth is not reflected at the bottom of the pyramid. Number one reason is the growth is too low relative to our population growth rate. So, we need to be growing at least at rates twice our current growth rates for the people to even begin to feel, the impact as you indicated or you wondered about. So the other thing, the question wasn't addressed to me, it was addressed to Ingwe, but I think it's unfair. I don't know why the last questioner decided to ask her why our refinery is not working. Okay, maybe because the banks are supposed to fund refineries. But the simple reason why our refineries are not working, first of all, the 4 government-owned refineries. These refineries, the youngest of them is at least 40 years old. The technology is whatever. Over time, they were not properly maintained. Those refineries are there. The truth is,
audio. Yeah. Yeah, it's a network issue. Okay, whenever Ben comes back online, we will let him finish off his thoughts. In the interim, we can listen to.
If those refineries produce, we lose more money. The Port Harcourt refinery.
Okay, is that it, DG?
Oh no, I heard you say that you were not hearing me, so I stopped because I had continued to talk.
Yeah, we were saying that whenever the network permits, you can continue and conclude. So you can do that now.
Well, I mean, I was trying to speak to the point about why refineries are not working. The refineries are not working. One, we're talking about the existing 4 refineries owned by government. The youngest of those refineries is at least about 40 years old. Those refineries are not in a state where they really, in fact, when they work, when they produce, we lose more money than when they don't produce. So I think that basically what we need is new investment into that midstream sector. That new investment really, begin to happen at the scale that is required when we, fully deregulate that sector. The Dangote's refinery is located in a free trade zone, so technically it's not even in Nigeria. So if we can't give them a price that makes sense for the products, they'll take their products where they can, fetch the right price. So.
Yes, while you're still on that issue of the refinery, then a question that we received, one of the written comments from Femi is, fuel importation and subsidy payments seem to impact foreign exchange. Do you think Dangote refinery project will help out in reducing the exchange rate effect? Ben, it's directed at you. So you may want to respond to that.
I think the impact is going to be minimal. I mean, the products that, the crude that Dangote will refine, you are not going to, if he buys the crude in Naira, you are not going to earn the dollars you will have earned for exporting the crude. Of course, what is going to happen is you're going to save on, you're going to save on certain elements of cost, like freight, like the time going to be reduced. With domestic refining capacity, you will need less strategic, storage reserve, for refined products. So all of these will reduce, your costs of, in some of the costs in the value chain, and therefore some, net reduction. But it's not going to be night and day in terms of impact on.
Before I let you go, there's another written comment from Neil Johnson. It says, the dwindling oil production, what's the solution? Or is the government overwhelmed? Quickly, you may respond to that.
The truth of the matter is the solution requires action by government, principally the security agencies. But right now, what is happening is grand scale collusion. Even the staff of the oil companies are involved in the game. The security agencies are involved. It's just, everybody, this thing there, the economic incentive is massive. So what is happening is there's a new security sector that has been put in place that seems to be, it's being tested, it's been test run this month now by one of the major agencies, and if it proves, if the result, are really, what they're designed to be, then what you might see is a lot more people resuming production onshore, which where most of the facilities have been shut down. And let me say this, I'll use the opportunity to explain this to people. You know, what had happened was, you know, a lot of the product that was being stolen from pipelines was what these people were cooking, the illegal refiners were cooking. And that, what they call cooking process, can only produce diesel. So a substantial part of the diesel which was being consumed locally was actually coming from these illegal refineries. And so part of what you're seeing, the spike in diesel costs, is not really, you know, it's driven by supply shortage. So as, you know, there's more foreign exchange made available to importers to actually then bring in diesel properly, you know, you're going to see a lowering of that cost, because right now there's a supply constraint, that because, you know, those production facilities have been shut down, so there's no product for people to steal and cook into diesel, which was, contributing significantly to domestic supplies, and we were all using that without necessarily knowing that that was the case. So I think that, you know, when you have collusion at the scale that you have, it just becomes difficult. The oil companies but you know, again, they are oil producers, they are not security agencies, so they are constrained again by all kinds of human rights, whatever, to take certain actions, like to, you know, to deal with the people tampering with their their facilities. So they have to leave that for security agencies to deal with, and unfortunately, people are not really doing the job now. But the government is, you know, making changes to address that.
Thank you very much, DG, Budget Office of the Federation. I'd like to quickly respond to an issue, the example you gave about the pastor preaching to the choir, and to say that the purpose of this media assessment is not for any party to preach to any other party. The purpose, as you know, before we got here this morning, the only person that knew, maybe with a reasonable degree of certainty, what has happened to the budget, was the budget office. So this is an information session. We don't even have a message to preach, you know. We came here to be informed.
Taiwo had a long sermon to preach.
And to have an engagement.
And unfortunately, that sermon just had entertainment value, because the people who can do something about all of what he was griping about are not sitting in this room.
Yeah, but I should assure you.
I'm a convert to most of it, but all that will happen is when I go back, you know, you've been saying so what's different? Yeah,
well, the important thing is that most of us here in this room today have no message to preach. We came here to be informed by you and our knowledge, our subject matter experts, you know, the discussants. But the session is coming where we could indeed preach. I'm aware that on the agenda of the chamber is this session is just an update session. It will be followed by a stakeholder session. And that's where the chamber would, you know, like to engage, to make its positions known, and then, you know, let other stakeholders make an input into that. And I hope that the budget office would also be a very active part of that too. We thank you for the benefit of your views and the information you have provided. Ben, let's now move on to the, thank you very much. Let's move on to the lady among the discussants. And I would also want to agree with Ben that it's not all the issues, you know, that have been directed at her she doesn't have to comment if she doesn't feel, comfortable commenting. What our Prince Ferdinand has said about why do banks prefer debt to finance debt rather than to finance equity. I can shield Chinwe from that question by saying banks can only finance what the issuers offer. I cannot compel the government to issue equity if their preference is to issue debt. I can only invest in the instrument that they bring forward. The same with companies. So if they want to issue equity, the equity market is open for them. Banks could buy. If government wants to issue equity, it's open for them. Banks will buy. We're a situation in which government issues zero equity. They only issue debt. So you are hoping that government will take such an initiative and begin to see that liabilities could be either debt or equity. And they themselves would offer, equity investment opportunities. Chinwe, over to you.
Okay, thank you. The question around diversification, I think the person was all the way there. So it's interesting because when you look at the national accounts, it looks like the country is well diversified, but then when it comes to revenue or receipts collection, that's when you see that it's lopsided. Now, I would say that when you look at purchasing manager index or indices and the surveys that go behind it, especially for those that are focused on Nigeria, you would see that operational costs are a big issue. And then power is one that feeds into that operational cost, and it's actually slowing down or reducing capacity for manufacturers to actually drive that diversification that's required. But therefore, steps being taken. We recently released a podcast on power infrastructure and forward steps that are being taken to address issues like that. Apart from that, when you look at value chain analysis, you see that logistics issues are also there. So we hope that when the steps the government is taking with regards to this Africa Continental Free Trade Area Agreement implementation, when we start seeing visible impact from that, it would contribute to driving the much needed industrial takeoff, which by extension will help with diversification. So that is on diversification. Then there was a question around capital reversal or outflow. Okay, so in my presentation, I did mention tightening, monetary policy tightening across advanced economies. So what does that mean? Central banks in developed economies are raising their interest rates or their policy rates. And that in turn results in what we refer to as a capital reversal or some level of outflow or even muted capital inflow into specific economies, which are usually emerging markets. You can see that there have been reactionary responses from other countries like Ghana. We've seen Egypt, I think Kenya recently, South Africa, and of course, at the last Monetary Policy Committee in May, in Nigeria, there was a rate hike. And why did that happen? To combat rising inflation, because when you look at yields, and then you now put it against inflation, there's what we call negative returns. And of course, it's not as attractive for some investors, but I would like to say that when you look at our yields, especially in the fixed income market, in the bond market, yields are still relatively high and so attractive. But for investors that we would refer to as risk averse, when you look at the macroeconomic conditions of a country like Nigeria, and then maybe you compare it with that of the US or the countries, specific countries, not all countries within the Eurozone, and also consider ratings from rating agencies. Given rising policy rates or rate hikes, you may see that some investors would prefer to place their money in these other markets. And also understand that when the pandemic, because even we started seeing this muted inflow, I call it muted inflow as opposed to an outflow. We started seeing it when the pandemic struck. So also understand that macroeconomic conditions globally, it's not just in Nigeria, are causing this investment posture. I think that's a terminology I'll give it. And then just one thing that's a big elephant in the room when you're talking to investors is also FX repatriation. When you're talking to investors with regards to Nigeria. So that is also causing some kind of bottleneck or apathy towards that sort of investment. But all that said, when we saw the latest report from the MBS on capital importation, we did see that there was healthy activity with money market instruments. So if they're still investing, capital importation showed that there was healthy investments in the money markets instruments. Bonds were relatively weak and the equity market was relatively weak as well. So I hope that answers your questions.
Thank you very much, Chinwe. I'll come last to you, Taiwo. I want to know if Folabi is still online and if there are any of the issues that have been raised that he wants to have a final word on. Dr. Lcci, are you there?
Yes, I'm here.
Yeah, the floor is yours. You can respond to any of the issues that you feel inclined to respond to, Dr. Lcci.
Okay, I think most of the issues have been satisfactorily addressed. Maybe I should just say something on the debt equity, which is, and I think I like your response to it in the sense that you only buy, when you come to the markets, is what you see there that you, I mean, those are the options that are available. Maybe, something that I may be able to add is that we can then start looking at why is it that issuers are coming up with more of fixed income, which are largely debt securities than equities. I think those are the kind of questions we then start asking after your intervention. As you know, the economic environment, government trying to do a lot of things with infrastructure. Government also trying to borrow usually. I mean, we have quite a number of large deficits and we are not really privatizing. I'm sure if today we said, everybody will say, refineries are not working, sell them. The next day, the government says, I'm selling. The same people can come back and say, why are you selling our assets? So, and I think that happens not only at the federal level. When I was presenting, I mentioned subnational. I look at many state governments who can issue revenue project bond, who can issue bond that will be used to finance revenue generating infrastructure. But many will probably prefer to do that from their budgets, supervised by the ministries. Private sector, sometimes when they come in, they are likely contractors and they want to get their money after some time. So I think going forward, we need to start looking at optimal way to finance our infrastructure so that we don't rely largely on the budgets. If we're able to do that, we can then start having some infrastructure companies that may be able to be selling equities to Nigeria. And then those infrastructure can generate money. And then they can be financed both with equity in the long run, even though they may start with bond, but there will be equity for others to exit later in the future. Thank you very much.
Thank you very much. It's an important issue, but it applies less to corporate issuers. All the issues in the equity market are private company issues. You hope that the day will come that you see states approaching the equity market to fund infrastructure projects, for example. And the day will come when you will, see a growing fraction of the market capitalization being federal government projects. But it's an open discussion. We can engage on it going forward. Thank you very much, Dr. Lcci. Now we can come to you. We can come back to Axman now. And you have a few of the questions directed, at you, and you may want to respond to them. Don't give as long a sermon as Ben said you gave the first time. But the question I had for you as you spoke the first time, before, let me just put this on the table. Two things. The distribution of VAT. Yes, at first glance, it might look like let derivation be the main principle. So if the VAT is collected from my jurisdiction, let it be mine. Okay? But it's not that neat. It's not that clear cut. Because if you look at the income tax, states collect personal income tax, while the federal government corporate income tax. For the reason that, yeah, you can say, personal residence is clear, but corporate operations could be nationwide, even when your head office is located in a particular state. The same with VAT. Corporate VAT payments, I understand, is made at the head office on nationwide purchases. So you can say that there's no justification to see corporate VAT as belonging to states, in the same way that corporate income tax does not belong to the states. So, but we don't separate corporate VAT payments from personal VAT payments. So derivation can apply to personal VAT payments, but equality principle should apply to the corporate. So those two principles remain on the table. Okay. Then also you have said a lot of informative things about the number of taxes, the new taxes being introduced. You seem to be saying that instead of sugar tax, why not carbohydrate tax? So we hope we won't get a tax on wheat and garri. And I had also feared when I started hearing, tobacco tax or alcohol tax, or what they call sin taxes, or sugar tax. I wonder how soon we will be talking about cholesterol tax, or high blood pressure tax, which means that salt may soon have its own tax, or oil, vegetable oil may soon have its own. Now, it's the fact that we do not need to travel that far, particularly when the new taxes do not seem to be making any difference to the tax revenue. So what are alternatives to tax revenue? Because the economy has been in recession, suffered lockdown, buffeted by devaluation. It's unlikely that tax revenue take will increase. However you try, because the tax base is recessed until the economy begins to grow again, it's not reasonable to expect that tax revenue should grow. But there are non-tax revenue. You have a lot of idle assets that you can generate revenues from. So I like your take on that. Thanks, Taiwo.
Thank you very much for those interesting comments and questions. So I'll be brief. I'll not make long sermons. So the first one is by Prince on the need to engage in dialogue. And I do agree. My frustration is that it takes this government far too long to deal with anything. So a lot of my public outbursts is out of frustration, because I've spent some of these issues, I've spent the entire 9 years, I was saying on my table. There's an issue on subsidy, I've been on it with government since 2013, from Jonathan and Konjo-Iweala to the present administration. It's frustrating. So it's good to have those dialogue, but government must be willing to at least, this is why we are listening to you. This is why we are not going to accept it. It has to be that you allow superior argument to prevail at every time. I do not think that the objective of setting up the Nigeria Economic Summit is defeated. I'm very much involved with them. They do a lot. It's the same issue of you work so hard, you say something 1,001 times before they hear it once. Even after this session, now we have one at 2 p.m. with NESD on subsidy. I'm not sure they will listen, but we'll keep saying it. Then there was a comment on local content, and my honest view is that all the local content laws we have in Nigeria is designed for the politicians and their friends. So they tell the public it's local, but it's not local content, it's patronage. So when we are ready, we can copy the model from China. It's easy to do local content, but what we're doing is not working. The question on why our refinery is not working, and I know, Dr. Ben is very honest, but there are things he cannot say because it's in government. If he says them now to be in the press tomorrow, maybe he will get a query. But I think he's doing his best. Our refineries are not working because of mismanagement, period. The average age of refineries in the US is 50 years. Most of their refineries are 50 to 120 years old, and they're still working. Ours is 40 and it's not working. The GMD of NMPC was at the National Assembly recently and confessed, which is what Dr. Ben was trying to say, that when the refineries are not working, we spend those 100 billion you see, right? That's when they are not working. When they are working, they take $100 products and they produce $97 outputs. So when they are not working, we lose money. When they're working, we lose even more money. Who does that? And it's not imposed by God, it's self-inflicted. So on the question of VAT, you're right, and that's not what I'm proposing. I spent a lot of time on VAT. In fact, when I was a junior staff over 20 years ago, we used to submit VAT returns by branch. And it was a lot of headache because a company will have procurement in Lagos and they have sales in, Kano. The government will say you cannot claim the input here. You will pay. Government people were borrowing to pay VAT because they can't offset. It took us years to get government to centralize so that you only file your VAT for the whole country where your head office is based. That is not a problem. The problem is we don't have regard for data. MTN, for example, generates revenue from all over Nigeria. When people are making calls in Kano today, in Enugu, it's remitted in Lagos. It's not Lagos derived. MTN can tell you the local government where the calls are being made. Banks can tell you where the transactions are happening. So you can design the system that is seamless for me to file my returns centrally wherever I'm based, head office, and tell you where the revenue is derived. You use that data to do the allocation of the revenue. It will solve the problem. When we're ready to do it, we'll do it. It is not difficult. So that's what I call the headquarters effect. And I've written a lot about this because Lagos will tell you they generate 55% of VAT. That's not true. They are not taking account of these points you made. Now, carbohydrate tax, I'm not proposing it. I'm just saying that, just to be clear, I'm saying that we are making decisions without using data because government argument falls down, crashing down like a pack of cards. If you say it's because of diabetes and sugar consumption.
We understood you.
Yes. So let's not do carbohydrate, right? We're not doing any of those taxes. Yes. But your important question is, what are the alternatives? I honestly think that if government is serious today, you can make more than twice your tax revenue within 2 years without increasing any tax, without introducing any new one. First, just get MDAs to do the right thing. And when they don't do it, there's something called firing. Sack people, heaven will not fall. So that when the next person comes, they'll know that they have to behave well. We are begging them, remit 20%. Who begs MDAs? You cannot. Nigeria is one country where it's not only the pastor preaching to the choir. We not only complain to us, even government will come out. Even President Buhari will come out and be complaining. Who is supposed to solve the problem? I don't understand. Then let's harmonize taxes, right? One revenue agency per level of government, reduce the number of taxes, how you collect it, block those leakages, translate the informal taxes to formal taxes. Agberos collect over 100 billion naira in Lagos every year. It's more than the IGR of any other state in Nigeria apart from Lagos State. So optimize asset. Finally, I don't think that this is just a talk show where we're educating ourselves because we brought out very important issues. I would encourage Lcci or maybe even collaborate with the rest of the private sector organizations. Even if it's just 3 issues you can tackle, how do we address FX? We know the FX policy is not helping us. If it's easy for me to come in, but it's uncertain that I can go, this meeting we're having here now, if it's uncertain that I can leave here, I won't come in the first place. So that's why FX is not coming. Let's deal with that. What can we do about subsidy, even if you're not willing to remove it? Can we address the inefficiencies? I don't have the time to do some of the analysis I've done on diesel price for you. And then finally, can we do like a submission to government officially? They're going to start the finance bill for the next year very soon. Let Lcci put something on the table. Whether they will now listen is a different thing. If you put, there is the very slim possibility to do something about it. If you don't submit anything, nothing will happen. Thank you very much.
Thank you very much, Taiwo. Finance bill. I have also, which is another angle to look at the tax revenue. Finance bill seems to concentrate on optimizing the tax revenue. So it's an income statement management tool for the government. We need a parallel effort on the balance sheet. We are talking about assets, we are talking about equity. Those won't fall under finance bill, fall under an investment act. So the sooner we begin to apply some of the effort and time to the investment side of things, maybe we would arrive at equity. Maybe we will then be able to unlock more non-tax revenue that will leave Nigeria out of the doldrums. That's as far as we can take it. I wish to thank the panelists for their insights, and I want to thank all of us for the very rich, comments and issues that we have put on the table. And I hand over to the Master of Ceremony. Thank you.
Thank you, sir. Thank you, sir. Thank you, Dr. Ayoteriba. Thank you, Mr. Taiwo. Thank you, Ms. Chinwe. Thank you for your sessions. And we will take, let me officially take a vote of thanks from the Deputy President, Mr. Gilbert Idausa. Thereafter, sir, we will take the picture. We'll have time for the pictures. Mr. Taiwo, we'll have time for the pictures. Let's have the vote of thanks from the Deputy President, Lcci, Mr. Gilbert Idausa, FCA.
The presidents, dignitaries, let me start by thanking our president, Asiwaju Michael Laoliko, and very senior members of the chamber, including highly respected life vice presidents who are here, council members as well, for empowering this event. Then I will thank Mr. Ben Akabueze, who at the last event we had on this subject had said that why was government not given a chance to speak? And his participation today has enriched this event. If Ben is still in the call, we want to particularly thank Ben. He is a private sector animal in the public sector governments, and he tries to remain part of both worlds, but as he said, it's difficult. And we want to say that we appreciate the effort that people like him continue to do to give a picture of both sides. But yes, we want to also thank Ben for making the point that the private sector needs to do a lot more investment in engagement. In America, the lobby industry is a multi-billion-dollar business in Washington, D.C. And like I said, perhaps we need also to invest in engagement, and perhaps have people from Lcci and similar bodies sitting in the National Assembly and working with them all the time to see that they listen. So we want to thank Ben for making that point. And I want to say that the president, when he made the president of LCCI was telling me that that's a very strong point that we need to look at. I want to also thank Andrew Nevin. Is always making himself available. Andrew has been in Nigeria for so long that sometimes he doesn't hide his passion for the issues in this country the way we Nigerians hold it. And we are always grateful to him, even when he's not in Lagos, that he's able to work with us. For our sponsor, it's a double gratitude to Coronation Bank and the Chinwe Egwin. She put her long experience in the industry, in the banking and economic policy space, in clarifying some of the issues, but also they put their money on the ground, on the floor for this event. They sponsored this event. And so we want to thank you, and we want to thank Coronation Bank, but also to know that the investment banking and development finance institutions are still doing a lot. In spite of all the issues we have about the economy, these institutions, these two sets of institutions are still putting a lot of money in this economy and still investing, in spite of all the pessimism that we have and see. For Taiwo Oyedele, we are always calling on him. And so we also owe him a double gratitude for him as a person and for PwC. In a sense, PwC and their LCCI are almost like having a door between us, a revolving door, our DGs and ex-PwC, and that almost gave us a license to always walk into DWC now and get almost anything we wanted. So Taiwo, I want to thank you and to thank PwC whenever we call you. Some of us don't appreciate what it takes for very senior people in these firms to make themselves available. If you know what Taiwo charges per hour to his clients, you'll be scared to even ask him to make his time available for us, but they do that happily all the time. For the Securities and Exchange Commission, Dr. Afolabi Oluokere, we are happy that, like the budget office, we are getting government agencies to see the need for this engagement, this constant engagement. And we believe that we will continue to invest in it. This year, our president is very, very committed. Our president is also a private sector person, Asiwaju Alale called it, in and out of government and business. And we believe that we need to do a lot more. We need to invest a lot. If we're talking of equity, equity is where real growth comes from. And so we want to do a lot more, and we hope that Dr. Afolabi will be available in future. For Dr. Teriba, Teriba is our in-house unpaid chief consultant on the economy, and we can't thank him enough. And these are some of the best brains in economic policy, not just in Nigeria, let's be frank, in Africa and beyond. And anytime you really want to get your pulse on the economy, Dr. Teriba is always there. I want to thank you, Dr. Teriba, again for making yourself available. For the audience, I want to say you have been a wonderful audience. We spent more than 1 hour, 2 hours, almost going to 2.5 hours. And most of you are here. We want to thank you for all the time. Some very, very senior people I see in the room that came from very long distances, and they still stayed at the end. I want to assure you that LCCI continues to appreciate all this effort and will continue to look forward to your engagement and leadership. Thank you very much.
Thank you so much, sir. Thank you so much, sir. So we take the photographs. So we'll have our deputy president, we have the president as well, and the discussants. Yes. Ms. Chinwe, we have, please can you, Dr. Ayo Teriba, Mr. Taiwo Oyedele, let's have a Dr. Remi Alosa, please.